Leads us to our talk of the tape, Nvidia's moment and whether it will live up to the hype. Let's ask our panel of experts. Stacey Rascon, one of Wall Street's top chip analysts, Bryn Talkington of Requisite Capital, she owns the stock, and Malcolm Ethridge of CIC Wealth. It's great to have everybody with us. All right, Bryn, you got this stock. You've done incredibly well. It's up more than 100% right into the print. What are you thinking about today?
So it's pretty incredible. Nvidia IPO'd in 1999. And actually, I went back and looked. It has had 8 years, Scott, where it actually had a return of over 100%. So while this year seems very rare for a stock to be up 100%, actually in the history of Nvidia, it's not that rare, which is so phenomenal. And it shows you what a powerhouse this stock has been able to evolve over the last 20 years. I think it's going to come down to, obviously, Jensen Huang is a master salesman, but he's got the goods to back it up. I think we want to hear about these H100 chips, which are really used for these large language models, which we're all getting to experience. You really want them just to hit that ball out over the fence and really have tremendous demand. So I want to hear about that especially. I think so do a lot of investors. All
right, Stacey, are the goods, to use Bryn's term, are the goods going to be good enough to justify this incredible move we've had in the stock? By the way, you haven't outperformed. Your price target's $300. We are there.
It's there. It's run a lot, and so we'll see how things go tonight. Look, I can't imagine that they're going to say anything that's going to kill the narrative, right? It's very clear that AI finally, even for the person on the street, is a real thing. They're actually able to reach out and touch it. They've got tons of demand, clearly more than they can supply at this point for these data center chips, these H100s and everything else. And like I said, I can't imagine that anything that they will say will kill the narrative. Nobody's going to come out of this call thinking that demand is less than they thought it was going into this call. I do think expectations clearly are high. I mean, again, the stock is up a lot like year to date, and it's up a ton year over year. At the same time, though, I think that. How did you put it? Jensen's got the goods. I think Jensen probably does have the goods.
Yeah, well, I mean, what do you do though, Stacey? What do you do with the stock as an analyst here? You know, it was 6 weeks ago where you just raised the price target. Are you tempted to move it to a neutral because of the run? Do you think it's justified and has more? I mean, how do you look at it as one of the top-rated analysts on Wall Street?
Look, I always say. Expensive all by itself is never a reason to sell a tech stock. Just like cheap all by itself is never a reason to buy it. There's got to be a catalyst one way or the other. I think you can identify a ton of catalysts here. I mean, yes, it's expensive. It's always expensive. You know, the day I launched on it, which was years ago, it was 50 times earnings. And it was not expensive. It was incredibly cheap because in the price to forward earnings, the denominator was wrong. Right? The E was actually a lot bigger over time than people were thinking. I think that's what you need to believe to buy it here. But I think anybody that's owning it here is of the belief that that E is wrong, is that it's not as expensive as it looks because it can still grow. And ideally, it can grow and drive earnings power more than what people are thinking right now. I still think that's a very plausible story for these guys.
I guess E equals AI, so to speak, if you want to just stay in the alphabet.
For tonight, maybe. Thank you.
Yeah. All right. Malcolm. You don't own Nvidia.
I don't, but I want to. And I think that the point that you just made about all of the analyst price targets was a good one because the average price target is about $2.99 and change right here, and we're literally right there today. So either we're going to get a bunch of re-ratings here, and folks are going to have to increase those price targets once again, one after another, following earnings, or we're going to see a lot of downgrades to neutral. And since I seriously doubt many analysts are going to be willing to stick their necks out and go against the grain and drop those calls down to neutral, I'd imagine those price target increases we're bound to get are going to also lift the stock a little bit near term, even if we get the slide in share price today that I, as a wannabe investor, am hoping for.
Yeah, but that's so funny. I mean, I saw the notes that you gave to our producing team, and you said that if it falls below 290, you'd buy it. I mean, over $10, really?
So I don't mean I'm going to go buy the entire position that I intend to own in the name, right? Let me be clear there. But I definitely think a 10% slide in the name is enough to make it interesting, because I think that we're having one of those moments we saw in 2019, the back part of 2019, with Tesla, where Elon Musk was trolling analysts left and right, all the short sellers left and right, because every time, someone would make a call that this is the moment when Tesla's got to fall, it would find a reason to go up again. And I think that's the same thing that we're seeing with Nvidia right now. Yes, it could be overbought, but they keep finding a reason to go up again and again in share price. And so I think it's a case where maybe you average down, right? So each time we get a significant pullback in the market, 10% or more is a good time to be going in and buying a few more shares and adding to your position, so that way, if it does continue to go up and to the right the same way it has this year, you get to participate in it, but you're also not in danger of getting whacked over the head because you jumped in with both feet and bought your entire position at what turned out to be the height.